In this video, I'm going to be going over my 3-step process all the way from where to trade from, what to look for, and why you are looking for it. So I'm going to be going over a specific trade recap on Nasdaq futures or NQ, and we're going to be going over the consistency of using the Asian range, using fair value gaps, and most importantly, identifying the buyers and sellers inside of these key levels.
If you trade ES or you trade NQ, I want you to watch this entire video all the way to the end, because I'm going to be going over a 3-step process that strictly uses order flow and fair value gaps to find the correct entry. So this was a trade that I took last week on Thursday, the 13th of November, and I'm going to be breaking it down, right? So I caught a snippet of this move from around 68.50 down to about 68.20. I only caught a small piece of this move, and I want to break down how I caught this trade using order flow and regular price action concepts. So just to begin with, I just want to give people some context. So what was going on was the following, right? So we had our structural lows, structural highs like this. So this was the dealing range that we were working in. So our dealing range, I define it as the most recent low to the most recent high like this. So the reason this trade was successful, just from a pure price action perspective, is that we were above the 50%. So here, this is a premium, and of course, in premium, we want to be selling down to discount. Now, if we zoom into this price action over here, we had this key level that actually was created on the 31st of October, right? So if you are someone who trades ES or NQ, you will know that this level was successfully giving us multiple rejections from support to resistance, resistance to support. And I'm going to be going over how you could have taken this trade as resistance or as supply. This was a huge area of supply in the markets. So this trade, on the 3rd of November, we had a bounce. On the 4th of November, we had a bounce. On the 5th of November, the 6th of November, we kept bouncing as resistance. So this was a large resistance in the market. Now, the following week, we broke above, so this became support. And then on Wednesday, this also held as support. So this was a nice sort of key level over here. Now, one question I get, and this translates into a problem for traders, right? How do I identify my key levels? So this is something I'm going to break down in this video, right? How do you identify these key levels? So basically, it's two things: order flow and fair value gaps. That's the only thing I use to determine my key levels. So this was a fair value gap that was created on the 31st of October. And I always use a 15-minute. So this is a 15-minute imbalance or a 15-minute fair value gap. So I just mark the candle before. Now, what's interesting here, if you go back and study this on the order flow, and this is where order flow does become important. If you just go back and study it, what you'll find is that price held as supply, price held as supply. And I'm going to explain to you what that means in this video, right? If you stick around till the end, I promise to make this very clear. What does supply actually mean? Why do some fair value gaps hold and some fair value gaps don't hold? Why do some work? Why do some don't work? So I'm going to try my absolute best to answer this question for everyone, right? Again, we held a supply. Again, we held a supply, right? So when price on Thursday reclaimed this area, right? When price reclaimed this area, there's only two things that can happen, right? So we tapped into this zone at, we broke below, call it 9 a.m. Eastern. So this is when I'm getting to my charts, I'm making my pre-market game plans, I'm explaining to traders what I'm looking for. This is what I'm going to do. So I'm going to break down my pre-market game plan from that day, right? So this was the 13th of November. So on the 13th of November, what is it I was looking for, right? So again, forming a plan is very important. So I'm just going to break that down. So when we come into the markets like this, you need to have a plan, right? You have to have a plan like this. So on this day, these are the two levels I was looking for. So this was the plan for ES, nice and simple. These are the two levels. So if we break above key level 1, I will go long. If we break below key level 2, I will go short. Now, this was a very good level for November. It's still a good level for November. It's 68.50 to around 68.40. So it's around about this region over here. So what was going on, if we break this down, was last week or the previous day, we held as demand, right? We held as demand, right? Price was rejecting, we held as demand. So when we come back to this area, we can either hold as demand again, or we can hold as supply. Now, without going into the order flow, it's very difficult to kind of decide which one it's going to be, right? One confluence that I recommend all traders use is something called the weekly opening price, right? So the weekly opening price is one of the most important things you can use, right? So this was a Thursday. Now, for those who don't trade kind of the weekly cycle, one thing you'll find on Thursday is that usually by Wednesday to Thursday, the highs of the week have been made, right? So I took a short on Wednesday, and we really respected this area of supply, right? So supply was in control. We're above the weekly opening price. I'm just going to write WOP. We're above the weekly opening price, and we're above this 50%, right? So we have plenty of reasons to short. Without looking at the order flow, we can see previous day supply and control. We're above the weekly opening price. We're above the 50%, right? So we are in a premium. We are overstretched for the week, and supply has held so far. So from here, this gives me a short bias, but it does not confirm my trade, right? You cannot use fair value gaps to confirm your trade. So how do you do that? Well, this is what I'm going to break down specifically. So if we go back to the 1 minute chart, if we go to the 1 minute chart, so there were two trades you could have taken. This was the trade that I caught specifically, right? So some people call this an opening range breakout. Some people call it a break and retest. Some people call it support resistance or support change to resistance. It doesn't matter what you call it. The fundamental principles is that sellers were in control at this key level. And this is what I talk about in all my videos, right? So you need to have a key level. This is very important. You need a key level. You then need to understand what you're looking for inside of a key level. So you need to know buyers and sellers. And the last thing you need to look for after buyers and sellers is you need to know who is in control, right? Who is in control, right? Who is in control of the price? So every time you take a trade, you need to have these three things. You need a key level, you need to look at buyers and sellers, and you need to know who is in control. Most people mess up step 3, and that's why they go wrong. So we're going to be fixing that. So step 1, we're looking for a simple break below the level, right? So we're waiting for that market open. So here's where we go. So we're looking for that. We're looking for the first sort of 5 minutes, 4 or 5 minutes like this. That's 9:30, right? That's 9:30. And notice how we've broken below the level, right? So I would have my break line like this. So I've been through this in previous videos where having a break line is important, right? Having a break line is important. Now, if we go to the ATAS platform, I was sharing my live executions on that day. So let me go there. So VIP chat, go back to Thursday, right? So what was going on specifically? Let's break this down. Let's just get it up. So this is what the execution looked like for that day, right? So I'm just going to get these two candles up next to each other, and I want to dive into the art of reading order flow, right? There is an art to this, right? Reading order flow is an art. So this was the candle 9:30. This was the market opening, right? So what do you notice just from the market opening, right? We had 9:30, 9:31. There's a lot you can read just by looking at the delta, by looking at the shifts of volume, by understanding where price was in the level. Did we break above? Did we break below? Super important. So let's take a look at this. So I've circled these 3 regions, which is the main reason the market moved down. And that's what I want to explain with this execution. So my execution that day was MES 8 lots. So this was my execution was at 9:35, 7 seconds afterwards. That's important. So I never trade the first 5 minutes, even though this was 7 seconds after the 5 minutes was over. So this is what you call the 5-minute opening range breakout. So what we saw is we saw buyers being weak, price breaks below. That was the reason to short. So I'm just going to be breaking that down. So if we just take a look at this candle over here. So this candle corresponds to this candle, right? This candle corresponds to this candle. So what does this move essentially show us, right? So what we can see is we can see a red candle. So we see a bearish candle. We see lower prices in this candle. But what was happening here specifically was we see aggressive buyers up top, right? We see 269 for 405. We see 149 for 204. We see this blue delta, this positive delta. So what this shows us is that buyers were aggressive. Buyers were aggressive, but we were unable to really break above this level. Because bearing in mind, this is, call this 68.52. And this down here is 68.42 down here, right? So 68.42. So what we saw was you saw a lot of aggressive buyers over here. Now this is how you read order flow. When you read order flow, you need to look at 2 things, right? Delta and follow through, right? Who is being aggressive? Now, you could argue buyers and sellers are both being aggressive, but you need to look at follow through. You need to look at who is rewarded, right? In this case, the sellers were rewarded. These buyers were obviously not rewarded. So the same principle happened here.
68.50, that was a critical level for the area of November. Now, this was a huge sell-off, right? Price really melted from this zone. Now, when you catch these big zones, when you see these big melt-offs like this, right, you want to fundamentally understand what was going on. So having your key levels is critical, and you need to know what was going on here, right? So this is what we're going to break down. These two candles here, very important. Now, this is where the order flow comes into play, so I'm just going to break this down. So this is ES, again, on the ATAS platform. We had two rejections. This was our first rejection at 9.35. 9.25, 9.30, 9.35. That was the first move I caught. Now, the second move was probably better than the first move. And this is where order flow becomes very interesting. So we had this bullish candle. So I just want to focus on this candle, this candle, this candle. So it's a classic 3-bar pattern, right? Coming into this level. 68.50 was a huge area of resistance on that day. And it was a fantastic level throughout the whole of November. But looking at it strategically, what we want to see is we can see from this first initial candle in, tons of aggressive buyers, right? The blue delta is overwhelming, 44 for 111, 350 for 710, 272 for 467, 157 for 327. We see a lot of blue delta, right? Delta, again, the right number minus the left number. It's that simple. So when you come into an order block, a fair value gap, a resistance zone, a breaker, whatever it may be, even an EMA crossover, a VWAP, it doesn't matter what you're using. You need to have a full understanding of who is aggressive in your zones. So that's kind of step number one. So if we break this down, if I take this away and take this away, this is what we're looking for, right? This is step one. So we see an entry 5-minute chart into our zone. So this candle here corresponds to this candle corresponds to sort of this candle here, right? So there you go. So if we break this down, this candle is this candle, right? 5 minutes, huge amount of aggressive buying. So much so, right, that the second candle went higher, right? This is what's important. Now, this candle was very telling. This candle was very telling, and specifically this region, right? This region here. This region was very important. This region was very interesting. So even though we had a bearish candle, it's a red candle or a black candle, it's a bearish candle. So price went lower, right? We broke below this level. But what's important to understand with this candle, even though it's a red candle, what we saw at the top was very telling. We saw 0 for 30. It's a finished auction, so that's 68.50.5. A finished auction is something you want to look for. A finished auction represents the fact that there's no, in this case, aggressive sellers, right? So the way you want to look at a finished auction, 0 for 30, it just means that buyers and sellers aren't really interested in trading at that price, right? 68.50. It means you're going to get a reversal bullish or a reversal bearish. Now, in this case, it was a reversal bearish. So we had this rejection over here. People call this a hammerhead. They call it a wick. They call it a pivot. There's all sorts of names that are given to this. But the fundamental name of this is an absorption. Now, this is what I want every trader to walk away with. It's the understanding of no matter how you trade, if you caught a sell, buyers were absorbed. And that's all that's happening. This was a resistance zone because inside of this zone, right, inside of this zone, so 68.43 to 68.53, this is what we had, right? 82 for 303, 357 for 436, 221 for 419. So this here is a huge amount of positive delta. Buyers were aggressive. Now, let me ask you a question. At 68.50, right, buyers were aggressive. So if we break below the zone and we break below this, right, were these buyers successful, right? Were these buyers successful? So what we had is we had aggressive buyers, right? And we had no follow through. So again, follow through I speak about in every video. The reason follow through is important to me is because if we don't have any upside follow through, so meaning if we don't break above here and we break below here and we break below our initial kind of break line over here, what that shows us is that aggressive buyers have failed. Or more importantly, what that means is we've had an absorption of aggressive buyers. So this is what we call an absorption. An absorption basically means, if I spelled that right, absorption, right? An absorption basically means that passive sellers are present, because if all these aggressive buyers have been eaten up, right? All these aggressive buyers have failed. We have no follow through, which means there's an absorption, right? Who is causing the absorption? Well, it's the passive sellers. So sitting at 68.50 was a very large passive seller. Now that's evident here, that's evident here, that's also evident here, right? We have a down candle again. Look at this wick rejection over here, right? Look at that wick rejection. 0 for 26, again, finished auction, a lot of blue delta, which means that the buyers were aggressive, but they were not in control. They were not able to drive price higher, which is essentially an absorption. Now, the reason I keep banging on about absorption, exhaustion is because this is the fundamentals behind how the market works, right? So this here was a huge trade coming from around 68.50, 68.45 you could have entered, or even 68.40. Stops above the zone. And just from a weekly cycle perspective, this trade had room to run, right? At least down to the weekly opening price, right? At least a 3.5 hour risk reward. Again, I didn't take this trade, right? I personally did not take this trade. I took the first trade. So my execution for that day was 9:35 Eastern at 68.40, and I was done for the day. So a 7-minute trade. So I was very happy to take that trade, right? So again, I broke it down. So key level, entry, and then you use order flow to determine who is in control, right? And that was the execution over here. So if you like this video, give it a like, give it a thumbs up. If there's any other question, if there's any other sort of markets or topics you want me to discuss, I'm more than happy to do that.